What is up, YouTube? My name is Adam and this is Broke Man Finance. Whenever a company is getting ready to IPO, there's always a certain level of excitement that comes along with that. What's that initial share price going to look like? What is, do we think it's going to go up? Do we think it's going to go down? How many shares are they going to actually offer? Because that determines a lot of the share price. When is the company actually going to IPO? Etc. IPO stands for Initial Public Offering, meaning when you and I can actually buy shares and own pieces of that company. One that I thought was surprising for a 2020 IPO but brought a lot of that excitement was Airbnb. Airbnb has completely disrupted the travel industry, and they've done it just over the past 4 to 5 years. I'm assuming if you're watching this video, you already are aware and know exactly what Airbnb does. But let's start out with a few fun facts about the company. They were started in 2008 in San Francisco when 2 roommates put an air mattress in a bedroom and called it a bed and breakfast, or a B&B. Hence the name Air Bnb. They have over 3,000 castles listed and over 1,400 treehouses on their site. In 2016, Airbnb launched an experiences service that allows travelers to connect with locals and get the experiences usually only the locals know about. In 2017, an entire country was listed on Airbnb, and that country was Sweden. When an entire country lists itself on your platform, you may just be onto something kind of profitable. Every minute of every day, 200 people are checking into an Airbnb. That's 12,000 an hour. Math. Airbnb was supposed to go public earlier this year in March, but the Roni Roni came through and said, "Not today." Obviously, you already know what happened after that, and the travel industry took a smack to the face. Pre-Roni, Airbnb was valued at $31 billion. Now they are just a little more than half of that at $18 billion, with $2 billion in new debt. That's what makes this IPO such a surprise, but it should also make everyone a little bit more optimistic about the future of the travel industry. Bill Ackman of Pershing Square came out and said they were looking for a mature unicorn to purchase with their SPAC, Tauntaun Holdings. A unicorn in investing terms is referring to a private company with a value of over $1 billion. Many of us believe that that unicorn was going to be Airbnb. I thought it could have worked out well for both sides. Look at what Bill Ackman and Pershing Square has done with Chipotle. Now that thanks but no thanks coming from Airbnb makes me believe that Airbnb is very confident that they can handle it on their own with no SPAC involved, and they can do it completely 100% by themselves, going the IPO route. Airbnb confidentially filed their IPO paperwork with the SEC, or Securities and Exchange Commission, in mid-August, putting lots of people on notice. The SEC began allowing IPO filings to be confidential in 2017. Unfortunately, because of the confidentiality involved, we're not exactly sure what those finances look like. And we shouldn't expect to get a glimpse of them until a couple weeks before they're actually listed. Airbnb has and is rebounding better than its competitors. Booking rates are up. It has sat better with travelers that many of these Airbnb locations were easier to disinfect and clean than their hotel competitors. Another advantage is the lack of overhead. Basically, it is far cheaper to run an Airbnb, the company, not just a Airbnb as what we know it now, than it is to run a chain of hotels. You have fewer employees, there are less repairs, etc. Plus, people still want to go on trips and take vacations, and with Airbnb they can do that while maintaining social distance. There were far more Airbnbs in remote locations such as the mountains than there were in commercialized areas that housed hotels. But is Airbnb making money? Short answer, no. Airbnb generated $4.18 billion in revenue last year and claimed it was profitable before EBITDA in 2017 and 2018. Remember, EBITDA is earnings before interest, taxes, depreciation, and amortization. But it lost $322 million during the first 9 months of 2019, down $200 million in profit for the year prior. During the second quarter this year, in full Roni Roni lockdown, Airbnb has lost 67% year over year in revenue. If you are an investor, and I hope you are, and I hope that's the reason you're watching this video, and at the same time, I hope you like the video and subscribe to the channel, but you have to love industry disruptors. For instance, Apple's iPhone, Tesla cars, Amazon delivery, and Airbnb. Now, what do those first three have in common? They have been stupid successful and made their investors a lot of money. Anything that disrupts their industry and changes the game deserves a look from investors, and there's a high probability that these companies are gonna be profitable. To put this disruption into context, Airbnb has over 7 million locations and they're growing every single day. Wyndham is the largest hotel chain out there and has only 8,000 locations. Jim Cramer from CNBC's Mad Money said this: "I think it will be a steal. Thanks to the Roni Roni, Airbnb is now the safest way to travel, which is why the IPO might end up being the steal of the century. It pretty much has the market to itself. The once mighty hotel and restaurant industries and their unions no longer have the clout to keep Airbnb down." It's not yet revealed how many shares they're going to offer or what that share price is going to be, but we're going to talk about that share price in just a minute. And there's always a chance that it drops initially like a lot of other IPOs have. Remember Facebook's IPO, and I've talked about it in other videos. Facebook had a lot of hype leading up to its date, its IPO date, and then it dropped substantially only to come back and make their investors a lot of money. Look at Facebook now, they're doing okay. Ultimately, it's going to be up to you what you feel like is a good entry point into this stock. But remember, I'm not a financial advisor. As far as Airbnb, it will be determined by the investment bankers in charge of underwriting this IPO. The share price is determined by the overall valuation of Airbnb, which we know now is much lower than it was at the beginning of the year. It's going to depend on how much capital they intend to raise, and it's going to depend on how much equity they're willing to give up in the company. But whenever they were talking about IPOing at the beginning of the year, and they were valued at that time at around $31 billion, it was rumored to come along with a share price of around $100 to $120 initially. So if we're estimating that share price now off of their current valuation and what those rumors were, and remember, there are other factors that go into determining a share price other than the valuation, then you could probably anticipate that share price being anywhere from $60 to $80. But it's going to depend on how many shares are offered, because more shares means cheaper price. Less shares means that the stock is going to be more expensive. For instance, look at your Tesla and your recent Apple stock splits. They split, there's no value really lost, but the share price is now cheaper. But that's all I have, guys. I hope you enjoyed the video. And do me a favor in the comment section below, leave me a comment on what you believe that potential share price could be. I'm going of a range from 60 to 80. We'll see what happens. Could be way off. Who knows? Only time will tell. But until then, I hope you guys stay safe out there and take care.